Hey guys, Corey Young here with Investor Life. Do you think real estate investing sucks? Have you ever thought that? Are you an investor now? Do you own properties? Maybe you own 1, 2, 5, 10 or more properties. I can almost guarantee you, if you do own properties, you have been investing in real estate, at some point, you've thought to yourself, real estate investing sucks. This might not work for me. It's not bringing me to my goals fast enough. Have you ever thought that? Tiffany and I have owned property since roughly 2004, 2005 is when we did all of our buying. So that's, it's 2019 now. So that's roughly about 15, 16 years that we've owned a significant number of properties. And there's been several times over the years that we've just thought, let's just get rid of them all. Let's sell our properties and let's get out of real estate investing completely. Have you ever thought that? It's an easy thing for all of us to think. And the reasons for it are large. I mean, they're huge. When we just talking about dealing with our properties, just the properties itself, we have vacancies. Sometimes you might be vacant for 1, 2, 3 or 4 months at a time. And what if you're vacant on more than one property at a time? That significantly affects your yearly cash flow numbers, doesn't it? Never mind repairs and maintenance. Sometimes when you're vacant, now you got to sink money into it. Not only are you not making money, you got to put money into it to get it to a point where a tenant will rent it at top dollar. So repairs and maintenance on properties can significantly affect our yearly cash flow. And that's the property side of things. But putting that aside, what else do we have to deal with? Sometimes we hear negative headlines all the time, news reports, whether that's about our economy, where properties are located, whether that's about real estate itself. I Googled Canada real estate this morning on Google News. And these were the 3 out of, I think, the top 7 headlines that came up. Canadian real estate demand slips again. Canadian real estate prices go negative for the first time since 2009. Canadian housing market headed for weakest year in almost a decade. Now, when you hear those headlines, what does that make you think? Well, it doesn't make you feel good about real estate investing, does it? Now, we've talked about this before. We can't read too much into the headlines. In fact, if we read those articles, we might easily find out that where we're investing in Canada is not necessarily affected by a lot of the things they're talking about. But maybe it is. Maybe we are in a market that is being hit hard and prices are going down. Or the vacancy rate is high, or rents are decreasing, and that's affecting our monthly cash flow. All of these things happen, and it can make us think real estate investing sucks. We've thought it. If you've thought it, you know exactly what I'm talking about. But you know what? I'm here today to not dwell on the negative things. I actually wanted to share something with you that, Tiffany and I look forward to this every single year. And it's one of the ways that we really make money when it comes to real estate investment. And sometimes we forget about it. Sometimes we don't think about it or we miss it. And it really, really has an impact when it comes to creating long-term wealth in real estate investment. And so I'm going to actually share a couple of things with you that really give us a positive outlook, keep us going. Because as you know, real estate investment is something that is long-term. We can buy a property 1 year, sell it the next. We might make money. Chances are we won't because we have a lot of expenses selling that property. So what's the point? We have to stay in long-term in order for real estate investment to really make a significant difference when it comes to the bottom line. And so to stay in long-term, to put up with these things, to put up with negative things that happen to our properties, we need to see the positives. And so that's something that I'm going to share with you today. And the positive that I'm going to talk about is the mortgage pay down. Now, if you've been investing for, let's say, 5 years or less, maybe 6, 7 years or less, this isn't something that you notice right away. Because when you get a mortgage, vast majority of the first several years, vast majority of that payment that you make every single month goes towards paying interest. and not necessarily paying down principal. But when we do start to see our principal being paid down, and we're at the point now, a lot of the mortgages that we have, we've been paying for 14, 15, 16 years. And a lot of those mortgages originally were either 25 or 30 year amortizations. So we're getting to 60% of the way there, 50% of the way there on a lot of our mortgages. And we're starting to see significant mortgage pay down. And so this is something I wanted to share with you. I'm going to show you a couple of our mortgage statements. And this actually gives you a glimpse into, if you're just starting out, this is what's coming in the future. And that can keep you going. The more positive things you see, the more ways that you see you're winning in real estate will keep you going. We'll change that thought in your mind when you're thinking, I want to get out of real estate investment. This will allow you to keep going and stay in real estate investment, to keep those properties and to not sell them. Because really that's what it takes. It takes time to create that wealth. So I'm going to share a couple of these with you and show you what we look at and how this really, really can have an impact on your portfolio, have an impact on creating wealth for you. And hopefully that's positive. So let's have a look at them right now. All right, so what I wanted to show you here on our mortgage statements, I blacked out a few areas, mortgage number and that sort of thing. But notice on our mortgage statement here for 2018, this is one of our properties. It's a condo in South Edmonton. Started out at $117,000 principal balance January 1st, 2018. We ended the year at $111,000. So we had over $6,000 in this particular property paid off on our mortgage. Now, we're not paying that money. The tenants are paying that money for us. And this isn't money that we see because, the rent goes into our bank account. All the expenses, including our mortgage, come out of our bank account at the end of that month or at the beginning of the month, whatever. And this $6,000 is part of that mortgage payment that just goes straight to the bank and pays down our mortgage. So we never see this in our bank account. But in this particular case, it's a significant amount. In fact, if you have a look at the total principal we paid, just over $6,000, the total interest we paid, $6,100 of the $9,700 worth of payments that we made in the year ended up going towards our principal. So that's 2/3 of every single month's payment is now going towards the principal. And this is a property that we've owned since, I think we bought this one in 2006. So we've had it about 13 years now. And a significant amount is going towards the principal. So next year we can count on this roughly being around $105,000. Another year after that, we're going to be down around that $97,000, $98,000 mark within 2 years. So that the balance is starting to decrease significantly. And that really, really makes a difference. Now, if we have 5 of these properties, what does that mean? If we have 5 of these properties, that means that per year, we're making $30,000. And how are we doing that? Well, by having tenants pay down our mortgage. That doesn't include the property going up in value. And sometimes that's what we focus on. And that's the only thing we think about when it comes to real estate investment. We think about, well, properties didn't go up in value. They, went up 1% or it went down 2%, whatever the case might be. And that's what we focus on. Or maybe we focus on, well, the rents have come down and I'm only making $100 a month cash flow in this property. Or I'm only making $500 a month cash flow in this property. And, is all this stress worth $500 a month? We might start focusing on the cash flow. But when we have a look at what we're actually making, so, in this particular property here, $6,100 divided by 12 months, we're making $500 a month on our mortgage being paid down. Every single month, this property is giving us $500. Now, this is just one property. Times that by 10, times that by 20, that can significantly affect your net worth. Now, another property I wanted to share with you here was, this is Royal Bank mortgage. This is one of our townhouses we have in North Edmonton, Northeast Edmonton. And look at the principal we're paying down on this mortgage. You know, in the last year, we paid over $10,000. So we're now paying more on the principal, you notice, than we are paying on the interest within a 1-year period. Now, this property is worth more money, so you see our payments are significantly higher, but we still cash flow in this property. And again, our tenants are giving us $10,000 every single year. So let's say roughly about $850 every single month that the tenants pay the rent. That is building up in equity or paying down the principal on our mortgage. And this is another part of the mortgage statement that I really like, is our amortization remaining. You know, we're only 13 years, 7 months away from this mortgage being paid off completely. In 13 years, when this mortgage is gone, assuming we still own the property, this monthly payment of $1,318 is also going to be gone. And our cash flow on this property increases by $1,300 a month. Now, if we have 10 of these properties, that's $13,000 every single month that we will make more once this mortgage is paid off. So these numbers really start to make a difference once the mortgages get closer to being paid off. And so that's what I wanted to share with you is, you know, in the first few years, you might not notice it. But later on, once you've owned this property for a little period of time, you know, we started noticing this about the 7, 8, 9 year, 10-year period. Once you start owning a property for a decent amount of time, then a large portion of your monthly mortgage payment starts to go towards the principal. So you know what we do now? What Tiffany and I do, when we get all of our mortgage statements each year, they all kind of come in within a 2-week period from all the different banks that we have mortgages with. You know, we open them up, we have a look at them. I scan them in and I file them because I hate paper. But we then look at how much money we made just on our mortgages being paid down each year. And it's awesome. It's something to celebrate. It's something that is a win in real estate that you don't necessarily see unless you look at your mortgage statement and you see the amount that your tenants are paying off for you. So something really cool to keep in mind, always watch your mortgage statements. Watch the amount of principal that you're being paid down, because that is money that is just being put aside for you. It's being banked on the side because your tenants are paying for it and it's knocking that principal down. And assuming the property doesn't even go up 1%, let's say the property value stays the same. In 13 years and 7 months, this mortgage is gone. And that monthly cash flow, we're already cash flowing a couple $100 a month on this property. But we'll be now adding the $200 we're cash flowing to the $1,300 a month that we were making on the mortgage payment. And now this property cash flows $1,500 a month for us. So it's a significant win once you start seeing these mortgages being paid off. So something that I wanted to share with you that's really, really positive. And as much as a lot of times real estate investing can suck, and a lot of times we feel that it sucks and we want to get out and we're thinking about selling, remember the mortgage pay down, because that's a big portion of how real estate can make you wealthy. All right, so something we wanted to share with you. Hopefully that helps. Hopefully that when you hit those negative periods, you start thinking about some of these positive wins that you might have, and you will stay in long enough for your cash flow to turn to wealth. All right, guys, Corey here again. I really want to thank you for watching our video. I hope that some of the things that we talked about and some of those tips really help you out, can keep you positive, because as we talked about, there's so much negative. In fact, you know what? Let's get rid of these because we don't want to look at those anymore. You know, we see so many negative headlines, that sort of thing. Let's get rid of them. Don't focus on that. Focus on the positives. Stay in real estate investment, because long-term, it's a long-term win. and it will really reap benefits down the road if you stay with it, if you stick with it. So I hope you found that information useful. Subscribe to our YouTube channel. This is something new for us. We're just getting going on this, but I think we have about 10 or so videos already. We're going to be adding more continually. Lots of great advice, lots of pointers that'll help you in your investing journey. You know, we've learned a lot over the last 15, 16 years of investing, and we're at the point now where we're really turning that around and sharing it back with you. So lots of good stuff. In fact, there's some things where we've made mistakes that have cost us $100,000 in a year. Those are some of the mistakes that we've made, and you don't have to make those. So just by watching a little 4-minute, 10-minute, whatever it is, video can sometimes just string a thought in your head that you never thought of before, or maybe make you go a different direction than you were originally planning. And that kind of stuff is really, really useful. We don't charge anything for it. We want to get that information out there, help as many investors as we possibly can. If you haven't been to our website, go to investorlife.com. That's investorlife.com. If you're looking for a realtor anywhere in Canada that's investment focused, we've vetted all of our realtors. As well, if you're looking for a property, an investment property anywhere in Canada, we have over 150 already on our website, all across Canada in lots of different markets. So a lot of good properties. The cash flows are already figured out for you. The rents are already there. So lots of good information. If you haven't been to investorlife.com yet, go there, check it out. If you have any questions, you know, our services, what we offer, it's 100% free to you. We get paid by our realtors, so we're not charging you anything to go there. So if you're not following us on social media as well, do that. We're on Facebook, we're on Instagram. So follow us on there. Again, we're always putting this content out so that, you know, it can definitely benefit you. Lots of good advice that's going to be coming in the coming weeks and years. So thanks again for watching. Subscribe to the YouTube channel, and it was great having you with us.